Federal Reserve have lost touch. They may have started out well and they may be trying to do their best, but this is going to crash everything. They're going to crash the economy with these measures. Hi, and a big welcome back to the channel today. Thanks so much for tuning in. I'm Neil McCoy Ward, and today we're going to be looking at the stock market again. I'm going to be doing a follow-up video to my video last month where I said the stock market was going to collapse, and it is going to collapse. It's only a matter of time. And since there were a number of people that didn't agree with the forecast from last time, I thought I would add even more indicators and even more data and evidence to today's video so that there can really be no question in anyone's mind that the stock market is going to implode upon itself. And I don't need to tell you that the stock market is absolutely booming right now. It's at an all-time record high, and a lot of financial commentators are saying, "Oh, I can't understand it. I just can't understand why it's going so high." Really, I don't know why people can't figure out why it's going so high. It's pretty simple when you understand the basic fundamentals of economics and finance. So I'll be going through some of those fundamentals today so that it doesn't matter if you are a financial literate person or you really don't know very much about finance at all. You'll be able to understand these indicators. I'm going to put it in very common sense, simple language for anyone to understand. Now, let's take a look at this then. And we can see with all of this adjusted, that right now the stock market where it's sat is at an all-time high, despite being in one of the worst recessions that we have ever seen. And again, this is a man-made recession. Have no illusions about that. This is not due to the virus. This is due to the fallout that governments have, their responses have made to the virus by all the lockdowns and things like that. And really, it is the Federal Reserve that are behind this boom in the stock market. Have no illusions about this. The Federal Reserve are trying not to do what they did in the 1930s. If you know what happened with the 1929 Great Depression, this was actually two deep recessions which caused a depression as a direct result, and the Federal Reserve openly admit this, that they made a big mistake by raising interest rates. This created a liquidity trap at the time, just sucked all of the money out of the markets. There was no money going around, and of course it created this huge recession, depression, drop in the markets. There was just no money available. So this time around they're doing the opposite. They're dropping rates to an all-time low, about as close to zero, or we're even discussing negative rates right now. And of course, this isn't the perfect solution either, because what's now happening is we've got too much money in the monetary supply. And of course, where's all of this money gone to? Where have the stimulus checks gone to? Where has, with bonds being so low, where's all the money gone? It's going into the stock market. It's going into the real estate market. So now what the Federal Reserve are doing is they're creating an asset bubble as a result of these low rates. A lot of people are saying the stock market's booming, it's booming. No, the big companies in the stock market are booming. Apple, Amazon, the big players, Tesla. This is where the money is going to. It's a mistake. These companies are overvalued, right? They are overvalued. When it takes 50 years, right, to get your money back on the price of a share, it tells you it's overvalued. The share price of a company is a direct reflection of the value of the company, of its profitability, of the money that it's expected to make in the future. What we've got now is just smoke and mirrors. It's all been inflated by all of the new money creation from the Federal Reserve trying to prop up the market. And when you have these historically low interest rates, all you're doing is you're stealing from the people by them losing money from their savings, because inflation, right? If you get higher inflation than the savings rate, you're stealing from the people. The banks are using this money, and they're not even doing fractional reserve banking anymore, where they're loaning it at X percent or X times on the money. They're just loaning out money. They're creating bad debts. They're just loaning to anyone in some regards. This is all going to end really, really badly. The Federal Reserve have lost touch. They you know, they may have started out well and they may be trying to do their best, but this is going to crash everything. They're going to crash the economy with these measures. So guys, that is it for the charts here. I think really you need to make your own decision on what's going to happen here. But